Welcome back to Small Cap Recap, everybody. Talk about a slow day. So slow, in fact, that I don't even want to talk about the market today. Instead, we're going to read a book. The Rock and Roll Generation, Teen Life in the 1950s by Bryce. Let's read something cool. In 1955, a handsome 29-year-old St. Louis hairdresser and part-time blues guitarist made one last stab at stardom. Chuck Berry, who already had been turned down by 3 record companies, made a crude demonstration tape and sent it to Chess Records, a small Chicago rhythm and blues label. I have to imagine he got like a record deal if he's in a book. Maybe after his last attempt, I don't even know. Oh, I see John Lennon in there. Huh. He was introduced to John Lennon. Wow. Oh, no, including... Yeah, okay, well, Barry definitely did because this is him right here. He was performing and stuff, so pretty cool. Man, I think it would have been cool to be a teenager in the 1950s, I won't lie. You know, I mean, besides all the fact that, yeah, maybe not, but like the pictures and stuff in here, all like they make it look like a ton of fun, but then in here and on the internet and like what you see in the history books, but in the same breath, I suppose there's like we've made a lot of advancements in life and society and technology. I guess we have it pretty well now, but I'd definitely be curious to know what it's like. Okay, well, aside from that book, I've got Matt's glasses. I walked up to him. Matt literally is sitting there, and he won't even come join me. Like, Matt, comment down below if Matt's slacking because he's like, oh, there's really not a whole lot to talk about. Okay, well, what? I have even less to talk about than you. That's why I'm reading a book. So I told him I needed his glasses to look like a nerd. Call him a nerd. No, guys, so here's the deal with the market today. Let's talk about, like, first of all, the overall market, which had a pretty strong rebound at the end of Friday, slight gap down over the weekend here. And let's take a look at the daily chart real quick. Kind of getting crushed, man. Like, fresh lows. Now, okay, to be fair, it's like, yeah, new lows since what? July, you know what I mean? But, you know, it's still just, it's like I saw Tim Sykes talking on Twitter kind of today, and he's right. You know, I mean, everyone wants to say, oh, this isn't a bubble, but, you know, in some breath, like, I think we kind of have to admit the market is inflated. Now, inflated in terms of, you know, dollars being pumped into it. Normally inflation does take a bit longer to kick in. But, you know, given this whole thing, I mean, we pumped a lot of money into the market. I think a pullback is healthy. It's probably needed. And who knows how big or small that could be. I mean, every time we've had these scary dips, you know, they have recovered. Here we had this lower high and everyone thought, I remember this. I was thinking like, okay, the market's done. Same thing here. Dip back down. They all just keep getting soaked. But this one definitely, I mean, you know, even if it does recover, it'll probably be a few weeks before, assume the best. It's probably gonna be a few weeks before it recovers to new highs, maybe even a few months, who knows? And if we do, you know, start, if the air starts coming out, it's gonna be slow. Tech especially has been more inflated than anything else in my opinion. And not to say that tech hasn't been big. Tech has really kind of gotten us, you know, through COVID with a lot of these physical stores being out of, you know, a lot of brick and mortars suffered pretty hard and tech really excelled. But what was interesting is like a lot of tech before, now this is before a lot of the earnings reports earlier in COVID, but it was a lot of speculation and ended up being right. But at the same time, I mean, I can go to basically every tech company. Let's just pull up a random one that I remember. Wayfair went crazy. I mean, like from 21 to what's that? Nearly 400 in a year. That's 800% for a real company, mind you. I mean, the market cap of this is $25 billion. Ran 800% in a year. I mean, that doesn't happen in a normal market. Like, you don't see that stuff happening with real companies. And no matter how good a company is, like that simply doesn't happen. In other news, let's look at Facebook real quick. Got cremated today. I mean, smoked. You know, for those of you that saw the news, it was like basically talking about how, Well, I mean, Facebook and Instagram were down today, outages, and basically hackers stole 1.5 billion people's data and sold it, I guess, across like the dark web or something. A very supposedly a common data sale site or something for hackers. I didn't read too deep into it because, let's be real, like Facebook, I mean, all of these companies are already selling the data, right? Like we know that. But I mean, Facebook's down 5% today. At one point it was over 5%, and it's quite, I mean, that's a really big drop for a real company. Let's take a look here. Little 5-year chart. Even Facebook's another example, right? I mean, this was down at 138 beginning of COVID again. COVID was, you know, every company suffered, but it still ran a little over, is that 200%? Just about 200% maybe to this top. Pretty crazy in a year. So I guess like either way, the companies like this, pullbacks are needed. The reason I'm saying all this is because this seems today, you know, with the SPY tanking, Facebook and Instagram are down, which, let's be real, Facebook groups, Instagram groups, pictures, like that's a lot of the ways a lot of like brand new traders or traders who just only follow alerts get their alerts from. So it almost makes sense, right, that the market's going to be a little slower. And then to top it off in small cap land, we had a midday offering come back. Well, no, the midday offering did not come back. Midday offerings are back. You don't see this a whole lot. Midday offerings suck. So the last big offering drop I remember was FAMI because I was caught in it. It was over the weekend. That is basically how most small caps do it. Overnight, you know, after hours, pre-market. This just did it in the middle of the day, and every time that happens, I mean, that's a momentum killer right there. That normally makes it pretty difficult for small caps to run. I mean, if you look over here on the top percent gainers scanner, there really is not a whole lot going on. XENE, I think, was I didn't even look at this because I looked at it pre-market. I think it was like an acquisition, it looked like. Something like that, a merger and acquisition. Oh, no, that actually moved today. I wonder if I didn't even check the news. I really didn't because they announced a public offering today at 4. To the moon. That is crazy. The huge FDA news sending XENE Pharmaceuticals to the moon. Okay, so they had FDA news. Okay, that was a legitimate one, but it wasn't by any means a small cap. But it was, wow, that moved pretty well today. There were definitely opportunities there. For some reason, when it gapped up, I thought it was like an acquisition, but I guess it didn't move at all like that. This has been a really nice buy. Let's pull up VWAP real quick. This is one of my favorite things. Yep. Has this dip and rip, holds VWAP, pulls under VWAP, but holds lows or holds above lows. Well, this is like my favorite buy. But again, this is a $1 billion market cap stock, so not necessarily something I would trade, but that entry right there, I love that one. Risk reward is pretty tight, even if you risk here. Another good one here, another good entry on this trend break. Not as good of a risk reward. Then it gets a little choppier here. After this pull, I would have been a little scared, but that was pretty nice. I didn't even pay attention to it again. A larger float than I generally would trade. All right, let's get out of these. We already went over Prague. Now I'm going to go over a couple of my trades today. I didn't trade a whole lot. I ended down the day $150, and Matt ended the day down $420, blaze up. So together that puts us down not quite $600, but $570. That math sound right, Andrew? 570, 420 plus 150. My brain, it's like not even fried. I'm just kind of tired. 420, yep. 570. Thank you, Andrew. Okay, yeah, let me go over two of my trades real quick. MXC basically helped me out a little bit. I was getting some scalps on it up in here, but it was a lot slower of a mover than I was really hoping for, which is weird because it was a pretty low float. I mean, 1 million float here, but just never really had clean moves. You know, I got this pop here. It was annoying too. So here, let me pull up VWAP on this one. This was kind of, I go over this pattern a lot because it's what I see working. So you have this, you got the rip, consolidation, hover above VWAP, and it had some really, really nice consolidation, right? I liked this a lot. So I took it right here, had this pop, and it just grinded. And then unfortunately, it really didn't get anywhere. Actually, I had to sell in for like a quarter of my shares at 6.15 and it hit 6.14. Did they do that on purpose? I don't know. Yeah, 6.14 were the highs. And then I sold on this dip of this 530, this consolidation low is my risk. Should I have risked here? Maybe. Yeah, I guess like if I was going to be longer term, not scalping it, sure. But then I re-hit these pops here. This pop here did not hit it for that 18 grind up. But that did, those are a couple nice little wins. GROM, unfortunately, was the one that got me at the end of the day. I think I was green about $200. I took some slippage on this, unfortunately. We had this VWAP recovery and the multi-day chart. I loved that multi-day chart. We basically just had this really, I liked the consolidation. Let me turn off all of this stuff. It had this dip, but it still held low, pop up today. And I was just hoping for this trend break right here. This is kind of what I was looking for, not excluding the after hours. Hoping for that VWAP recovery, then run back up into the fours, low fours maybe, and then have a opportunity tomorrow. Still might, again, as long as it's holding this low, I think we're fine. But I unfortunately have noticed that in this choppier market, multi-day charts only matter when it actually breaks that key level. So if by tomorrow it doesn't break and hold up here in the higher threes, the mid to high threes, probably going to be a whole lot of nothing. I did take a couple other trades today. I don't remember exactly what they were. I haven't uploaded my trades yet, but it is what it is. Again, just a slow market after GROM happened after Prague happened. That was kind of the key. In my opinion, that's what kind of kills the Momo. Midday offerings are tough. SPY is pretty heavy red today. I mean, what's that? 1.5%, 1.2%. So, and if it keeps making fresh lows this week, it's going to definitely be tough for a lot of the small caps to really gain momentum. So I'll keep staying in that scalpy mindset, going for the really easy trades. We'll go over AMTX real quick. Just look at the chart. We talked about that on Friday. That unfortunately didn't even try to hold up today. So it was a no trade. Wow, that got crushed. Yeah, I liked the daily chart on that. The 20 breakout was pretty key, but that fell really hard today. I was hoping we could have a push up into the 20s, but now it looks like I'll keep it on my radar again for that 20 breakout. I've got price alerts set. Rats. But that's just how it is right now. So, yeah, I wish I had more. Oh, I guess I won't go over a bunch of charts here, but we did have a lot of oil sector stocks running today because crude oil or light crude oil was breaking out into over 6-year highs today, was what Papa John said in chat. I think that was the 6 years, I think is what he said. So we had a lot of the SDPI, PED was moving a little bit today, a little choppy. SDPI, unfortunately, they were really good in the morning, and then by the time the afternoon hit, the only one that was moving was MXC. It was an energy stock. That was that one I was talking about. So, if oil stays strong, and again, because the prices of oil are increasing quite drastically right now across the United States and probably around the world, that sector will definitely be something to keep a watch out for, but nothing like today. It wasn't anything crazy. A lot of these oil stocks are pretty beaten down, the small cap ones. And it's not generally a sector I trade well, but I'll keep it on watch. If that's what's moving, I'll keep scalping those. Oh, and we'll do a quick CEI update as we close out here, and that will be the end of the show. Again, just giving you guys a quick little, since there's not a whole lot to talk about today in terms of my trading or our trading, like me and Matt's trading. We'll just kind of go over this. Yep. CEI is just couldn't hold green, and unfortunately, the air is probably going to come out of the bag soon, which does suck. That was fun while it lasted, but anything's possible. It's a ScamX ticker. Anything's possible. And Amex, we call it ScamX because they're scammy. I hope that doesn't just crash and burn, but that's what CEI has done in the past every time it ran. So that's basically all I've got today. Again, I'm keeping CEI basically always on watch, not to trade, but almost as a indicator of how the small cap market might do. And yeah, unfortunately, that's all I've got, folks. So, Andrew, what do they need to do? What do they need to do?
Yeah, guys, just like, subscribe to this channel, comment below if you have any questions for Matt and Bryce. And yeah, that's it.
Andrew, I got a question for you. Do you think I'm going too Hollywood on these people?
What do you mean?
I don't know. Like, am I changing? I saw comments on Twitter. So Matt Monaco made a joke about small cap rockets versus breakouts and breakdowns. And then like people thought we had beef. Everyone's fine, by the way. Don't worry. We're all still really good friends. But there were like these random people commenting like, oh, I liked small cap rockets. Then Bryce went all Hollywood on us. I don't even know what that means. Do I seem like a Hollywood star now or something because I'm doing small cap rockets?
No, I don't.
Thank you. I like to think I'm still a genuine guy.
Yeah.
I'd like to think. Andrew's just saying that to make me feel good. No, anyways, guys, yeah. And tell them how many subscribers we're trying to get to, and how many do we have right now?
Yeah, I think we have close to 90,000, and we need 100,000 subscribers by the end of this year, and it's October.
And I know we talk about this sometimes. Do you know the number off the top of your head? How many people that watch Small Cap Recap, how many of them are not currently subscribed? It's like kind of high, isn't it?
Yeah.
Like it's like 30, 40%, I think. And guys, we're getting like 5,000 people watching these. If 40% of people that watch it or whatever the number is would subscribe to us, that'd really help our goals. It would mean a lot. We like to think we're trying to do something good, even when the market's slow, just kind of giving some market updates. And please, it really does mean a lot to us if you can subscribe. And if not, just comment and like down below, guys. And that is all we have for today. Thank you for tuning into this slower episode. Hopefully we get some momentum picking up throughout the week. But as of now, like always, play it safe, play your plan, and I will see you back here tomorrow, hopefully with Matt Monaco, so he can be wearing these glasses. They're kind of dirty. We need to tell him to clean them. All right, guys, thank you so much. See you tomorrow. We hope you guys enjoyed that last video. Thanks so much for watching and being a part of the StocksTrade community. We wouldn't be here without you guys. Be sure to hit that like button and subscribe to the channel if you haven't already. Our goal is to hit 100,000 subscribers by the end of the year, but we can't do it without your help. So if you enjoy what we're putting out and want to hear more, be sure to hit that subscribe button. I'll see you guys in the next video.